Brilliant. Well, thank you very much, Gorm. Thanks for having me and giving a chance to chat about Horizon Copper. It's an exciting new copper story that we're all excited to tell. It recently started trading in the last 6 months, and not many people are familiar with Horizon Copper and who we are. But as we discuss the story and people get to know more about ourselves and the quality portfolio that we have and how we're so different than the other copper companies out there, I think people see the appeal. I'm the president and CEO of Horizon Copper, and I've been in the mining industry for many years, over a decade. Helped build a multi-billion-dollar company in the royalty space, alongside a really competent team, and helped negotiate various transactions and raised over $1 billion debt and equity financing. And so I'm really excited to talk about Horizon and what makes us unique and different compared to other copper companies out there. In particular, I think when you look at Horizon Copper, it's got some incredible assets in its portfolio. And as we talk about those assets and how our plans are evolving, there's some forward-looking information. So, people should be cognizant that the future hasn't happened. But what I think is really impressive about the story is the fact that we have an interest in three of some of the best copper assets in the world. And I don't mean, small assets or ones that are just high grade. I'm talking about, interest in, the third largest copper mine in the world, or what will be the fourth largest copper mine in the world, and interest in one of the highest grade gold copper mines out there that's been discovered in the last decade. And so unlike, a company that has one asset that is, in one jurisdiction, we have three amazing assets diversified around the globe. And what you'll see us do is continue to acquire these minority positions and add to our portfolio. What's also unique about our portfolio is not only do you have three world-class assets, but you have some of the best operators behind those assets moving these projects forward. Companies like Rio Tinto, Teck, Glencore, BHP, SSR Mining. These are operators. These are large mining companies. And so not only do you have, I think, world-class assets, but you've got world-class partners moving your assets forward. And the other unique thing about this story is, if you believe in the copper price and you believe that copper will be higher in the future, we have tremendous torque to the copper price. We have a market cap that is relatively small to our enterprise value, about a 50 million market cap compared to $250 million US enterprise value. And so that difference, that enterprise value between market cap and the actual enterprise value is IOUs. And this is debt. And, I spent a decade as CFO of a multi-billion-dollar company, and I recognize in the mining industry, debt is actually kind of scary and it can be dangerous. But the debt that we have is very unique. It is held by one partner. They're debentures that aren't owed for another decade. They've got, no financial covenants. The interest rate on them are negative yield. So, combined interest rates are only a few percentage points. And Horizon has the ability to pay back that debt in shares as its share price goes up, subject to the holder not consolidating the financial results and owning more than 34% of the company. But that allows the company, as our share price goes up to, let's say, $1 million per share, you can pay back $1 million of debt with one share. And so not only have world-class assets run by world-class partners, but you've got tremendous torque to the copper price. And so you've got an increase in your enterprise value that accrues all to your equity holders. And so you get that unique ability to pay the copper space. And then the last key feature in this story is the fact that we're backed by a large multi-billion-dollar funding partner in Sandstorm Gold, and that's the entity that holds that debt. And they're helping us scour the planet, utilize the largest corporate development team in the royalty space to add more of these passive interests into the portfolio. So you'll see us over the next 5+ years become what we believe is a premier mid-tier copper company going forward by adding more of these amazing assets into the portfolio. And the beauty of our portfolio is not only do you have one of the assets currently cash flowing, but you've got a couple of them that'll be coming online in 2027 commercial production, where we can actually make, I think, a great return for investors based on the demand and the lack of supply available in the copper space. I don't think it's a surprise that there's this output gap supply that's coming, where, even if you don't fully believe, the EV transition, if you don't believe the energy transition, the amount of actual copper reserves available in actually getting to production over the next decade is quite questionable. And so we believe that there's quite a deficit coming. Not only us, but a lot of well-regarded banks and investment professionals out there. And so we believe we can make an impact when that deficit comes and also make an attractive return for investors. And so I think one of the advantages that we have in the copper story is the fact that we have Sandstorm Gold, which is a precious metal royalties company that's helping Horizon find these copper assets. And the beauty of copper assets is they come with precious metal byproduct. So we have the ability to sell a portion of the precious metals that comes with these copper assets to a streaming and royalty company. Sandstorm has a right of first refusal on the streams and royalties that we sell, subject to it maintaining its 30% ownership in the company. But that allows us to use, their technical team and its corporate development team to scour the planet. And so, Sandstorm looks at over 100 transactions in a year alone. And so we're able to utilize that, depth of experience that's been built over a decade to find those copper assets that other people may not be familiar with, or find copper minority positions that people aren't looking at. And the beauty of our position is the fact that you have, not many people looking for passive minority positions, while Horizon Copper is. That allows us to build a large portfolio, a diversified portfolio of copper interests, where if you're just one mining company, you take so much effort to actually operate a mine, the amount of team that you need, the amount of management focus you need in ensuring that copper asset's moving forward. But because we're building a portfolio of these passive interests, we're relying on like the Rio Tintos of the world and the Glencores and the BHPs and the Techs to move these assets forward. So we don't have to be utilizing so much management time operating these assets. What we get is a check. Like Antamina is our first asset that I got highlighted here. This is a check that we receive on a quarterly basis. It's a 1.66% NPI royalty that we have on an asset that we believe will be cash flowing for many decades to come. When our technical team, we did our site visit and we met with the operator of Antamina, we were quite impressed with the long-term planning that they have put in place. This is the first asset that we'd seen either from Sandstorm's perspective or Horizon's that was being planned on a multi-generational scale. And so we're really excited about having this asset into our portfolio, an asset that will be cash flowing for, many, many years to come. And so this is kind of like an anchor asset in our portfolio and is cash flowing today. Our next asset that we have is Hod Maden. This is an asset that's got its key permits in place, and it recently has a new operator in SSR Mining. They own 40% of the project. We own 30%, and then there's a Turkish partner that owns another 30%. This is an asset that won Discovery of the Year at PDAC a few years ago. And when you actually look at this asset, the quality of it, the incredible grades associated with the project, and the lack of complexity associated with it, you can see why we think this is an asset that's going to be really just a cash flowing machine in the portfolio. SSR Mining, they recently became the operator and acquired the 40% interest from that Turkish partner. And they are making a construction decision this year on that project. And they've publicly indicated that commercial production will be in 2027. And I'll touch on them a little bit later, but this is a company that, has brought other projects in the region on time and under budget. And so I think the market quite believes them as we do, and we work very closely with them on moving that forward. And then the third interest that we have is through our 25% ownership of Entrée Resources. They have a finance carried interest on a portion of the Oyu Tolgoi ground. And so that should be starting to come onto the portion that we have our interest in 2027. And so they're in development ore right now. But this, by the end of the decade, when it's actually fully meeting all the throughput goals, will probably be the fourth largest copper mine in the world. So you've got Antamina, which is, the third largest copper mine in the world on a copper equivalent basis, and then Oyu Tolgoi being the fourth largest copper mine in the world on a copper equivalent basis. And Hot Maden being one of the highest grade discoveries. And so we're really excited to have them in our portfolio. And so when you look at a company, what you really are looking at are what are the quality of the assets within that company. And so there's not a company out there sub 2 billion market cap where they have, these first quartile assets in its portfolio. And so I think we screen incredibly well. These are, first quartile assets. That's really important because, the cost of drilling, expanding the resource, finding more pounds of copper becomes a lot cheaper when the cost of associated mining those pounds of copper are less. And so we think it's a great portfolio to launch the company with. At the end of the day, I did my undergrad. I was a major in math, and so numbers have always been really important to me. And I think the quality of a company really comes down to not only your assets, but what are the cash flows that shareholders are going to receive. I think in the mining space, sometimes, we often talk about resource or, how many, ounces of gold or pounds of copper in the ground. But at the end of the day, what really matters is what is the end cash flow that shareholders are going to receive. And so you're looking at, prices that are below spot right now, especially for gold, but for copper about 380. These are cash flows that we anticipate will come to Horizon shareholders. And so we finance some of these transactions via some streams and royalties with Sandstorm to put them in our portfolio. And these cash flows that we're showing are net of those streams and royalties. So this is truly what are the cash flows attributable to Horizon shareholders. And so you see today, Antamina is the asset that was just closed in the last 6 months and put into the portfolio, should be cash flowing about $10 to $15 million US on an annual basis. There'll be some variability on those cash flows on an annual basis, but these are going to be strong, chunky cash flows for what we believe will be many, many, many years to come. And then with Hot Maden coming online in commercial production in 2027, you're going to have incremental 20 plus million US coming to Horizon shareholders. Again, this is net of the streams and royalties that are owed to Sandstorm via the financing of these transactions. And then eventually with Oyu Tolgoi coming online, our attributable portion, when you look at our 25%, would be another $20 plus million on an average basis. And so what this story tells you is this is one of the few companies out there where when your portfolio is fully operating, you're going to be cash flowing your market cap on an annual basis. And I think that's an incredibly unique story out there from a cash flow perspective. And then when you layer on the fact that, the deficit that's coming in the copper space, and if you believe, even partially any of the projections associated with what, analysts and banks are saying, you can easily see a scenario where copper goes to $6 and gold even, 2,200 is closer to spot, but you can certainly see that as a price target. What you have there is you've got tremendous torque then to the actual underlying commodity price. So, where in the previous scenario you're cash flowing your market cap, now you're actually cash flowing multiples of your market cap on an annual basis. So I think what we're trying to create is this cash flowing machine at Horizon Copper, a machine that, do you believe, the first question, the quality of the assets in the portfolio? And I think the quality of assets, the answer is easily yes. And then the second question you have to ask yourself is, do you believe in the operators pushing those projects forward? And I would say that when you associate yourselves with some of the best operators in the world and some of the largest mining companies in the world to move this forward, they have the expertise to move those projects forward, replenish their reserves, find more pounds of copper and resource. And so, those are the two, I think, gating questions. And if you can get comfortable with that, then you can see how these cash flows are actually real as opposed to other, junior companies out there in the copper space where, that they might have a decent project, but the amount of capital they have to push forward, or the team that needs to push that forward isn't in the company, or they have to rely on an actual operator with the technical speeds to come in and actually operate it. And so all these dilution events, whether it's, drilling that project and, expanding the resource, putting a feasibility study out there, those same issues don't exist where they have, dilution of equity holders. In our portfolio, we're already cash flowing today. We don't anticipate issuing any equity in order to move our portfolio forward just because of the nature of the assets that we have in here. In Antamina, it's cash flowing today. Oyu Tolgoi is a finance carried interest, so there's not a cash call associated with it. And with Hod Maden, that's a capex that is relatively small to that project. And we only have to pay 30% of the equity check associated with it. The operator of that project, they publicly stated that they're looking to do project financing. And so you've got, 65 to 70% of the capex debt finance. And so our equity check would be 30% of that remaining 30% equity. And we've got the working capital available to meet that and access to credit facilities to fund, our portion to move that project forward without having to raise equity. And so I think that's a very unique story in this. One of the things that I do like to highlight is, we do have a cash flowing asset out of the gate today in Antamina. This shows you, if we held this asset, this royalty in our portfolio, over the last 5 years, what would have been the cash flows that would have been attributable to Horizon shareholders net of any streams and royalties associated with that project. And I think what you can see here is, again, these are US dollars. You're getting chunky cash flows coming from this royalty payment. And so you've got some, even when copper was below $3, you've got, $10 million, $11 million in annual payments that would have been attributable to Horizon shareholders. 2029, there was a dip that year, partly related to grade and some capex associated with the project as well. And so that's what you've got, that dip. But then in 2020 and 2021, you can see that come back up. And when copper was on a tear, you can see, on a net basis, that would have cash flowed over 23 million US to Horizon shareholders. And so there's going to be variability in those cash flows. And that's why you see us in the previous slides talk about, an average of 10 to $15 million US, because there will be some capex associated with that project over the life of that asset, with respect to tailings, et cetera. And so we've tried to provide some context for what we think on an annual basis that royalty will be cash flowing. I think understanding the capital structure of Horizon is important. Again, this is what I alluded to earlier, where you get tremendous torque to the copper story. But you've got, an enterprise value of close to 200 million US. And so the market cap of that is, less than 50 million. And the difference is the IOUs owed to Sandstorm. So the fair value of that debt's about 185 million US. But again, this is debt which has below market rates. They're not owed for another 10 years. There aren't these financial covenants. And right now, all we're doing is using all our cash flow that we're generating, and we're paying off that debt. And so even if you don't believe that, we can find more quality assets and place them into the Horizon portfolio, even if you don't believe, the largest corporate development team in the royalty space is, going to be able to find another quality asset and add it to the portfolio, what is really appealing is, if you just assume all the cash flow that's being generated in the portfolio is going to pay back all that debt, what you do is you get this double whammy feature where more of that enterprise value is now accreting to equity holders. And so, even if you do nothing, more of that equity is now, more of that enterprise value is now held by your equity holders. So you get this double whammy effect of not only a re-rating from these assets cash flowing and the copper price going up in your portfolio maturing, but by a function of time, you own more of the company as equity holders. So that's a very unique feature to Horizon Copper, and one we're quite excited about. And so, when I talk about that torque, what I mean is if you get a 10% increase in your enterprise value, the value of the company, all that value is accreting and directly going into equity holders' hands. So, a 10% increase in your enterprise value equates to, close to a 50% increase in the equity holders' hands. So I think that's incredibly appealing. You've got the quality of the portfolio that you can take comfort in, the quality of the operators that you can take comfort in, and then you've got this tremendous torque to the copper price, which I think is unique to the story. And that's assuming you don't add more assets into the portfolio, convert any of that, debt into equity. And so I think that screens quite well. When I look at, over the coming year, I also have to reflect back on the last year. In the last year, we've seen a couple things happen to our portfolio that have been quite beneficial. On Hod Maden, as I mentioned, SSR Mining's come in, a multi-billion-dollar New York listed company that has experience in operating assets in Turkey, coming in now, moving that project forward. That's been a great re-rating event. They're looking to go into construction this year. They're putting all their resources behind that project. So I think that's been quite beneficial. Hod Maden has received its key permits, which is another important thing over the last year. Then when you look at Oyu Tolgoi, one of the key things with respect to that asset is it's actually now done, the capex associated with the underground mine. They've done drawbells over this last year that have been successful. And now they're moving into development ore, which is on the interest that we have through Entrée Resources. And so that's happened last year. Now, when I look at over the next coming year, you've got some incredible things coming with respect to a construction decision and moving into construction of Hod Maden. I think a lot of our shareholders have been excited to have that happen and actually have that move forward. You have SSR Mining, a public company who's operating, who's now going to start drilling that project and start talking about it publicly, where before the operator of that asset was a private company. You didn't have news flow coming out on that asset. So you're going to see more information coming out, hopefully on project financing, drill results, construction updates, detailed engineering, these type of things that I think will validate the quality of the asset in the portfolio. And then when you look at, Oyu Tolgoi, I think you're going to see more news come out of that with respect to some of the drill results they've done on the ground, maybe an updated resource on the Lift 1 and Lift 2 on that project as well, and some more good news coming out. And Antamina, we're hopeful that over the coming time, they're going to announce an extension of the mine life as well. And so the operator of that asset, CMA, that's owned by a partnership of Glencore, Teck, and BHP. They publicly stated that they have applied for a modified EIA last year, and they expect a positive update on the mine life extension to 2036 as a result of modifying their EIA. And so we're excited to have that announced too. So, and those things are independent of the fact that copper moving forward and the price accretion that is associated with it. But it's a very exciting time in Horizon Copper, and that's just the existing portfolio today. When we show this slide, this is kind of like looking at other copper companies. And I think what's important for shareholders to understand is, when you're investing in a company, there's a cash flow that comes from that company, But sometimes investors don't understand the operating cash flow that's coming from that company sometimes has to go back into investing cash flow just to maintain, your growth profile, the asset itself. And so you're not left with much free cash flow as an investor in those scenarios. You've got cash flow coming in, but it has to go back out just to maintain the asset. What you've got with Horizon Copper is, I think it screens incredibly well of, that cash flow coming in, but you've got also the assets that are coming online over the next couple of years that'll be adding to that cash flow. And it's not cash flow that's, operating, going back into investing just to keep those assets alive, being in a harvesting position. And so I think Horizon screens incredibly well in that perspective. Share structure. Sandstorm owns about a third of the company, key shareholder, as I've mentioned before, a strategic investor. Management board at 7. When you look at family and stuff, you're probably closer to 7 or 15%, closer to that. The rest, you've got institutions and investors. We're quite focused on dilution. And one way to ensure that you're focused on dilution is the fact that management holding and being incentivized in terms of returns for equity holders. And what I mean by that is when you look at my shareholder position, I was co-founder of the company, CEO of Horizon Copper. And so in those scenarios, you often have CEOs and stuff hold a bunch of cheap shares in the company before it goes, public and trading. But in my case, I wrote a 7-figure check in the public financing. So the only shares I own are the ones that other, shareholders were able to participate in. I don't have any cheap shares. And symbolically over the last, year and a half, 2 years, my salary of the company has only been $1 a year. And so, although we're cash flowing tremendous amounts of cash flow, we don't have to go raise equity, and we have access to capital. I think that helps show the market that my interests as CEO are very much aligned with other equity holders in terms of where is the value going to be driven from this investment, and that's really through equity returns. We have a very strong board and management team. This is a team that's built multi-billion-dollar companies. We've got strategists and expertise from finance to law to just building companies itself. We have strategists when it comes to top economists in the country. One particular was senior economist at a large Canadian bank, Scotiabank, for over 30 years, dealing with critical metals and copper as well. And we're also utilizing the technical team at Sandstorm to help, scour, our projects. But Horizon Copper has an independent board from Sandstorm. There's only one board member between the two, but they have independent investment committees and teams. So very excited to have the quality and breadth of the board and management team. Antamina, I'm going to highlight briefly this asset. Again, if you're in the mining space, this is probably one of the bucket list mines to visit. It is in Peru. This is an asset that, has been cash flowing for over a decade. It, produces tremendous amounts of copper to the point where it's one of the largest copper mines in the world. And it's, again, first quartile operations. This is one of the truly world-class assets. And we're excited to have an interest in this project. We receive a check on a quarterly basis from Teck, but it's not on Teck's portion of the project. It's on 100% of the project on Antamina. Hod Maden, this is in Turkey. This is uniquely positioned in terms of access to infrastructure, to ports, to hydroelectric power. And so it's incredible. And it's also further away from, communities and stuff, to the point where, it's one of the few EIAs that we've been associated with where there weren't any, public comments associated with the project, and it has support from a social license, which is very important in today's environment, especially when you see places in other parts of the world where that social license can really impact whether or not those operations move forward. Turkey, not many people know, this is a country that's become the largest, gold producer in the world, and the grade associated with this project is just phenomenal. It's one of the highest gold and copper grade projects in the world, and we're excited to move that forward. Now, Antamina, mentioned before, is actually producing and operating, so you don't have as many questions about, can it get into production. Hod Maden is the one asset in our portfolio that's not in production today, in the sense that, it still has to go into construction. So I think as an investor, you got to look at what is the quality of the operator moving that project forward. And so when you look at this project, I think you have to look at SSR Mining. This is again a large public company that has experience in Turkey moving projects forward. And one of the projects that they moved forward on Turkey was on the Çöpler mine. And this was an asset that they brought on time and under budget. And that's unheard of in the mining space. Usually there's massive capex overruns, delays in construction, et cetera, et cetera. But, this is a quality group that not only, delivered on the Çöpler project, but they also exceeded, their mine metrics. And so, now you have that same team that delivered on Çöpler, moving all their focus on Hod Maden and allocating the resource to move that project forward. And so that gives us comfort and confidence in moving that asset, and we've been excited to be working with them in moving that project forward. And then the last asset in our portfolio is Oyu Tolgoi through our 25% ownership in Entrée Resources. Entrée's two major shareholders themselves, Horizon and Rio Tinto. And so what you see in the blue shaded area is their 20% carried interest. That orange entire section is what people refer to as Oyu Tolgoi. And so and this slide kind of shows in a little bit more detail of, again, the dark shaded area is the 20% carried interest on that project. And so that orange area to the bottom right that you see highlighted, that is the ore that's on the Entrée ground. And so that equates to about 17 years of mine life. And so they're in development ore right now. So 40 million tons of resource at close to 1.5% copper, and then there's gold and silver and other components associated with that. That green section below that shows you the lift 2 scenario, where that's a resource of tremendous amounts of copper. When you actually go through the mathematical calculations of what does that mean in terms of actual copper, that's close to 4.5 billion pounds of copper. That equates to over a 20-year mine life extension there. And so when you're looking at the cash flows, these are cash flows that we believe will be happening for many decades to come. And then, to the very left of this screen, there's this area called Heruga. That's not in any of our financial projections, but, this is, again, ore that's close to, 1.4 billion tons of copper. This is an incredible ore body as well, and accounts for, many decades of cash flow to come. So this is a quality asset in our portfolio. Again, they're in development ore right now, so it isn't a question of are they going to move and build the underground mine. They've actually spent the capital for it. They've done the drawbells. Now it's just a function of time before it comes onto the ground that has our interest in it. On ESG, I think when you see other projects in the world, it's important to understand what is the social license, what is the ESG associated with these projects, so that you get comfort that these projects will move forward. Antamina, this is a project that is, well regarded nationally and globally in terms of its reputation, especially in Peru. They've done a fantastic job. We spent time on ground with their team, their community relations group, just to get an understanding of their plans and processes, and we were quite impressed with them. Oyu Tolgoi, they've worked Rio Tinto hard with working with the government to get interests aligned, making sure that they've got the stability agreement within that government, and moving that project forward. And it accounts for a significant portion of its GDP, which is important. Hod Maden, again, this is one of the few projects we've ever been associated with that has, as part of its EIA, zero public comments received. And so it has support and significant, stakeholder uh, support on the project. And so that's important. And it's important also that there's a Turkish partner that owns 30% of it, a Turkish conglomerate called Çalık. Their mining arm is Lidya Maden Çelik, and they've helped build projects in Turkey as well and have a great reputation. And we've very much enjoyed working with them and SSR Mining. So in summary, when you look at, Horizon Copper, I think you've got an incredible portfolio of 3 world-class assets that are, run by some of the best mining companies in the world. You get tremendous torque to the copper price. You don't have to be worried about necessarily equity dilution within the portfolio, which is rare in the mining space, given the access to capital that Horizon has. And you've got, this strategic partnership with Sandstorm to help, move, eyes all over these assets to help add them into the portfolio. Where in, 2 years, we've been able to add 3 world-class assets. We're excited to see what happens over the next 24 months in that portfolio. And you've got a senior management team and board that's very incentivized and aligned with equity holders. So when you kind of combine that all together, I think Horizon screens incredibly well and is probably one of the most unique copper stories out there.
Let's start with your journey through Sandstorm. Can you give, some people that watch this might not even be familiar with Sandstorm. It would be a minority, but some might not. So can you kind of tell us about your journey and key learnings and your participation in Sandstorm's growth?
Yeah, absolutely. Happy to. So, background on myself, I did my major in mathematics, wanted an entrepreneurial spirit that I wanted to try in university, and found that business would be the best way to do that. And I needed the financial literacy in order to do that. So I picked up what's called a chartered accountancy, articled at PwC, and became, one of the fastest promotions to senior management in PwC Canada history. And then picked up a CFA along the way. And Sandstorm was this company that was just starting out. It was co-founded by, Nolan Watson and Dave Oram, who were the, one of the first few employees of Wheaton Precious Metals, one of the largest royalty companies in the mining space. And they were looking for a CFO, and I love the business model, and I love that, they had started the company with a couple key quality assets, and I was excited to be part of it. And so over that decade plus, when I joined as CFO, we grew it into a company with only a couple assets to a company with over a couple hundred assets. And we grew it from, a TSX venture company similar to what Horizon is today, to a company to now trades on the Toronto Stock Exchange and the New York Stock Exchange. And it's become, a multi-billion-dollar company. And so, during that time, I helped raise over $1 billion of debt and equity financing, negotiated with some of the largest companies in the world, reviewed contracts, put it all essentially part of the investment committee and process, and a portion of corporate development as well. And so over that decade, developed a unique skill set. But what's most valuable during that time is, acquiring these assets and finding over the course of that decade how many hundreds and hundreds of projects our technical team looked at, and what made a project good and what made it, not successful. And so, we made some mistakes over that decade where some projects, in the early stage of the company, didn't perform to expectations. But a lot of those assets that we acquired exceeded expectations. And the key contributing factor to getting returns that are multiples of what you invest, to me, were one, quality of asset. And so that was a key message that we made sure we brought into Horizon. And that's why you see the asset quality is so high, because, these quality assets, you're able to drill and expand the resource. And so you get this incredible mine life expansion. And then the second thing we learned is you need to be associated with quality operators, because even if you have a quality asset, if your operator is not strong enough, they can make some really bad decisions, and that can, lead to a loss in equity holder returns. That was another thing that we learned. And then one of the other things I learned was ensuring that you build a company where you don't have an equity overhang. So what I think a lot of mining executives still don't understand is you may have a quality asset. You may tell people, hey, we're trading, at zero point 0.1 or 0.2 times your net asset value, and look at how much value there is. But what you have in that story is you've got to, raise equity to do drilling. You have to raise equity to do a pre-feasibility study, and then a feasibility study, and then move the project forward. And so over time, when you're diluting all these equity holders, sure, the value of that asset you're getting more of, but because there's so many shares outstanding, you're still trading, a decade later at 0.1 times NAV because you diluted everybody out. And so for us, one of the lessons I learned was over that time at Sandstorm is, minimize equity dilution. And that's why the portfolio we have doesn't need to go raise equity. So that's kind of a summary of, my background and Sandstorm. And Sandstorm continues to acquire assets and grow and become, the one of the premier royalty companies out there.
So I think it's kind of important to explain to investors Sandstorm's rationale originally to originate Horizon Copper. Can you kind of give that story?
Yeah, absolutely. So the rationale behind it was, Sandstorm wanted to be a pure precious metal royalty company. That was its business model. But in its portfolio, it had some, copper interests. And so what was serendipitous is its crown jewel, Hod Maden, as I talked about in the presentation, wasn't a pure precious metal asset and royalty in itself. So it spun out a couple of those assets into Horizon Copper and took back in return precious metal royalty on that asset and some IOUs, which I talk about in the presentation. But what also instigated the creation of Horizon Copper was the fact that, Sandstorm noted that in order to grow its portfolio, it found that its best transactions arose with partnerships of other companies. So if a company was looking to acquire an asset, it could help finance that acquisition with a low form cost of capital via a precious metal stream. The beauty of copper assets is they come with precious metal byproduct. And so you've got, Horizon Copper, you've created this partnership where Horizon's looking for copper assets, and those copper assets come with precious metal byproduct, and it can sell some of those, a royalty on that precious metal to Sandstorm. Sandstorm can then help grow its own portfolio, and Horizon gets this really cheap form of financing to, add more assets into the portfolio. Now, the relationship with Sandstorm, Sandstorm has a right of first refusal. So if Horizon chooses to sell a royalty on a copper asset, it has to go to Sandstorm first in order to sell it, subject to Sandstorm owning more than 30% of the company. But over time, Horizon can go look at any other, precious metal royalty and streaming company, whoever performs and provides the lowest cost of capital, whether that's the largest in the space like Wheaton Precious in Franco-Nevada or whoever.
Exactly. So that's very interesting. And so let's give people an example. So let's say you were to acquire a 20% interest in a copper project with a significant gold or silver stream attached to it. What would the kind of financial plumbing look like behind that deal in relation to Sandstorm? If we just give a pure example of how it could look like, or what you think would be most likely in the coming couple of years.
Yeah, a great question. And I'm also an example-based person. So to me, that helps illustrate, how do you actually acquire more assets? But let's do a simple example of you acquire, an interest, a passive minority stake in a copper asset for $100 million US. Now, depending on the size of the project, that might be 20% of the project. It might be 5% of the project. Depends on the nature of that project. And so what Horizon is looking for are copper assets, precious metal byproduct. And so in that scenario, that $100 million, you can probably do 30, $40 million in a royalty on the precious metal, not the copper, but the precious metal. And then that asset, what we're looking at right now, cash flowing asset. So it comes with its own credit capacity via debt that you can add onto it, via, chartered bank that would provide you an RCF. Even our existing portfolio today has access to credit capacity independent of that new asset being added on. And that equates to another, $30, $40 million of debt capacity. So what you're left with is, a $100 million check, 80 million of it is spoken for without having any equity dilution. So that remaining 20 million can either be done through an equity financing if it's accretive, or you have some scenarios where the counterparty says, I want to build a relationship and partnership with Horizon and also Sandstorm as well, and I'm willing to take, an equity position in that company. So you wouldn't have to do a public financing for that remaining 20 million. But that's the kind of highlight. Again, because, my compensation is just, equity in the company. I have equity in the check. It isn't, a salary that I just collect, or except for that $1. We're not going to be doing deals just for the sake of growing. It just doesn't make sense. If it makes sense to add an asset that's a quality that's accretive to shareholders, then we'd add into it. But right now we're actively scouring, and there's assets in our portfolio and our pipeline. And hopefully over the next 24 months, we can add another asset. But I remember when we launched the company, people said, how are you going to find these copper assets? Everyone's looking for them. And then within, 9 months, we were able to, identify and get an interest on Antamina, one of the largest copper miners in the world. So, I think history speaks for itself, and you can see the quality of the corporate development team that's looking for those interests.
Yeah, and it's very interesting. Obviously, we see a bunch of corporate development projects being, looking. It's always expensive to build, generally speaking, especially the big ones, the porphyries, with usually have some gold as well. So it's an interesting positioning. It is certainly very interesting for Sandstorm as well, and not to mention for you guys. It's seems like very just good on all sides. Kind of financial engineering and repackaging to serve investors, but also to the lower cost of capital. It's a intriguing structure for sure.
Yeah, very unique. There is no other company out there like Horizon Copper building this passive portfolio of interest. And so we've got a head start on doing that. And over the next few years, we hope to add to that portfolio and make money for shareholders.
So when you say passive interest, like for example, Hod Maden, you of course you have to write the checks when it comes to financing the build of the project, but ongoing kind of exploration costs and stuff like this, are you responsible in paying kind of ongoing capital requirements for expansion and stuff like this, or how do you structure these deals up front?
Yeah, I think when you look at our portfolio, 2 of our assets, Antamina and the Oyu Tolgoi interest, there's never a situation where there's a cash call required. You don't ever have to pay anything. It's a question of just collecting cash, because Oyu Tolgoi is a finance carried interest. And Antamina is just the royalty that comes up. So the only asset in our portfolio where you'd actually have to write a check to move that project forward is Hod Maden. And so that's the one we own 30% of. And it's just the grades of that are so high that the all-in sustaining costs associated with, let's say, an ounce of gold is closer to $550 an ounce. And so, or, less than $1 on a copper basis. But that's almost equivalent to, what you'd pay as part of a traditional stream on an asset. And so if you have, the operating costs go up by 10%, that's another $50, compared to where gold is at. It's closer to $2,000 today. And so it's not, the project itself is so high grade and the cost is so low that when you have capex overruns or operating cost overruns, it doesn't really impact the cash flows coming from it. And it's such a low capex. When the feasibility study came out a few years ago, it was 300 million. So I'm a big believer that inflation's real and capex overruns happen. So a rule I always would have it, over my decade is if it's 300, it's probably closer to 400 million in terms of capex. But that project, because it's being project financed, that's SSR's intention. The equity check that you have to pay to push that forward is really small. So even if there's like, a $30 million overrun associated with it, our portion of that overrun becomes really tiny. And so those are the projects that we're looking for where, the capex isn't as necessarily large from our portion, or we don't have to look at the project and go, hey, we have to go raise equity to meet our capex exposure. And that can come through the way we finance the stream of royalty or how we finance the acquisition itself. And so when you look at transactions going forward, you'll see more vanilla type transactions where we own, 5-20% of a project going forward.
Exactly. And on an ongoing basis, once cash flows are divvied out to Horizon, is everything essentially just netted once you're in production? So if you have certain exploration costs, it will just be netted to you for you to maintain exposure to the checks being divvied out on a quarterly basis. Is that the structure?
Yeah, so the way it works at Hod Maden, because that's the only one where this would be relevant to in terms of calls, we have, a shareholders agreement that talks about divvying out those excess cash flows on an annual basis. That's a contractual requirement. But once you build that mine, the only cost associated with it, aside from, operating it, would be as if you want to do exploration on the project level. So those exploration costs would be borne by the actual operating entity itself, being Artmin, the interest that we have 30% in. So our dividends would be net of those exploration costs associated with it. But we're really excited about actually doing some exploration on that project. This is an asset that's had very little exploration because previously the operator of that asset is a private company and they don't need to increase the profile of that project before permits were in place. They don't need to, talk to shareholders about it because it's privately owned. And so SSR coming in, actually drilling it for the first time, we're really excited that they actually spend some dollars on this 7-kilometer strike on the project and hopefully find the offset associated with Hod Maden and show the world, wow, this is what this asset can deliver. And so we're really excited for that.
Yeah, and we'll get back to Hod Maden more later. But so the umbrella idea for Horizon is essentially to have passive exposure to copper. So there's no plan of becoming a strict royalty or streaming business down the line. It's you're kind of open-minded to every type of exposure, so long as it's passive. It can be direct interest, it can be an MPI, it can be a royalty, it can be a stream. Is that correct?
Yeah, I think that's right. Right now, we're not interested in operating a mine. We've kept our G&A quite low. I think this year less than $1 million, which is, I think, unheard of in the mining space. And so our interest is, and because I come from the biased history of dealing with royalties, I found that you can build a portfolio, have diversification in your portfolio if you acquire more passive interests where you're not operating yourself. Because Antamina, tremendous amount of effort to operate, but as Horizon, it takes no effort to collect a check on a quarterly basis. It just hits our bank account. And so the more you can build those kind of interests, the better it can be, I think, for shareholders.
And then, just to give some detail on the team, you're leveraging Sandstorm's team, of course, because Sandstorm effectively, if you look at the enterprise value, owns the vast majority of the company right at this point. So it's its fair interests are aligned in that regard. Do you expect that to change, in 3, 4, 5 years from now, where you start to in-house these things, or do you expect this intricate kind of overlap to remain for a longer period of time?
No, I think that Sandstorm's definitely not in any rush to get rid of its interest. I think they want that right of first refusal over time to maintain. But naturally, what happened is both companies, Horizon's going to get large in terms of size just via, its portfolio maturing, that it may not have to do any streams and royalties. Sandstorm, in the meantime, has been able to get, a silver stream on Antamina as a result, et cetera. And so it's met its purposes. So over time, they'll diverge and you won't have the cross ownership via the board member on the board. But certainly over the next, few years, Sandstorm is going to be an integral part. We've intentionally tried to keep G&A low, but over time, Horizon will add to the team and have its own technical team, etc. But today, based on the portfolio list now, there's no need for that.
Yeah, and it's completely unique. Obviously, it's extremely attractive for investors, and people should really pay attention to that aspect. It's something else when you have a small company like this being able to leverage, because that's the entire business model. I mean, it's the people that you have access to that is the entire business model. And you can leverage that. It's a tremendously interesting aspect of the case. And we always like to ask, net worth exposure. You've been very clear about that already. You're very aligned with other shareholders. In terms of the shareholders directly in Horizon, not looking at Sandstorm and management, what's the split between retail and institutional approximately right now?
Yeah, I'd say the remaining splitting out Sandstorm and Horizon will be about 50-50, I would say. Yeah,
okay.
And so we're trying to, over the next year, increase liquidity with respect to the story. We're investigating, US OTCQX associated that'll increase liquidity as well. And the challenge is a lot of people want to buy shares in the company, and the liquidity right now is lower, and they want to increase their exposure. And so we're helping get the story out there so we can have more liquidity in the stock. But yeah, you've got a significant portion of the company that's held by retail that will be trading it over time. But they're more interested, and they've heard these presentations. They love the quality of the assets, and they recognize the deficit coming, and they think they can make a lot of returns off Horizon by holding it.
Then I want to touch. No, so I want to touch on the 40 million warrants approximately outstanding. So who holds these warrants, and can you give some details on when their latest exercise date is and so on?
Yeah, so the warrants were given as part of the public financing, and so they're held by retail shareholders. I own some, so they're not held by unique individuals as part of some extra return. They were part of the public financing, and they're not due for another. They have an expired about 4 years left in them because we just did the public financing.
Okay, so that will trickle in over time.
Yeah, exactly right. Now they come with cash, so they're not cashless exercises. So you get the cash associated with it. So the net dilution on them is significantly less.
Okay, and then just briefly, just to go over this, the financial position. What's the current cash position? You mentioned that the annual burn rate, kind of just looking at G&A, is approximately 1 mil, and the interest payments should be, I don't know, like 3, maybe 3.5 million at this point.
Yeah,
could you clarify those parameters?
Yeah, so US working capital is close to 20 million US right now. And so what you'll see us probably announce over the next year is some increased, debt capacity if we so choose. But all that capital that we have on our balance sheet is allocated towards just the capex associated with moving the construction of Hod Maden forward. And so on a quarterly basis, receive a check from Antamina. We use that cash for any G&A related items, which is, as I mentioned, pretty small, and then the net amount to pay off debt, because you might as well pay off debt. And as I mentioned before, more of that enterprise value will accrete to equity holders. So when you look at what is happening over the next year, that $20 million is essentially just earmarked towards the capex associated with Hot Maden.
And if I recall correctly, it's about 180 million in the ventures outstanding, and you have a 2% interest until Hot Maden is in production, and then it will bump up to 4.
Yeah, so the good question. What happens is there's 2 tranches of debt that we have. The fair value associated with it, again, 180 odd million. One tranche is non-interest bearing until Hot Maden is in commercial production, and we're receiving dividends from that. So you've got this interest-free period for X number of years, and then once we are receiving dividends and cash flow from that asset, then it has interest bearing at SOFR plus 2%. The Antamina, the other tranche of debt that we have is right now bearing just a 3% flat over its life. So when you weight the two together, it's less than 2%. And then when you look at, okay, when it's actually the Hot Maden's dividend cash flows, et cetera, and you've got SOFR plus 2%, then your all-in interest rate is closer to 4% based on rates now. So that's where those figures come in.
So the total interest expense per year, where's that sitting at? I mean, obviously I can do the math, but if you just what's been on rate currently?
A few million bucks. Yeah. So
right. Okay. Okay, let's see.
Again, that assumes that none of that debt gets converted to equity. There's no deals or transactions that would necessitate, converting some of that debt into equity, which would reduce your debt.
And it would be kind of good to hear your thinking on this. So I mean, generally speaking, before Hot Maden has entered, commercial production, and it does seem like the best interest would be not to I mean, maybe not to repay as fast as possible the outstanding debentures. What's your thinking on that? I mean, obviously it does, however, increase the equity, as you say, linearly to repayment. But what's your thinking on that? It's always a balance act, right?
Yeah, Sandstorm took on considerable amount of debt itself. It took on about $400 million of debt to help finance the acquisition of Antamina. So this is an asset that isn't worth just 10, 20, 30, 40 million. This is something that's worth hundreds of millions of dollars US. And so as part of the financing transaction, there was an agreement that after the G&A and costs associated with running the company, the excess cash flow, if there aren't other additional uses for it, should be paid back to Sandstorm so they can pay off the debt. So the answer to me is we don't have any use for that cash flow right now. And so I think it's in the best interest of shareholders to continue to pay down that debt. And I think it speaks to the safety of the investment in terms of, as a shareholder, you can look at all that cash flow is just paying off debt. And so I think it de-risks the story even more from my perspective.
Yeah, no, I think it makes sense, especially as you say, with keeping in mind that Sandstorm has this debt component and you are in a partnership with them to do deals, and probably Sandstorm will be a bit more inactive until the debt position they have is reduced. So
yeah, so when you look at that cash flow coming in, what investors should expect is, hey, Horizon keeps a portion of it with respect to its G&A, and then meets any of its obligations for interest, etc. And then the net amount is just being paying off the debt, which is, I think, what everyone should assume. That's why, because contractually,
okay, so
the mechanics associated with it.
Yeah. So let's talk about the 3 current assets in the portfolio. So let's start with Antamina. It's a long-standing asset of scale. It's fairly mature. I mean, for sure, one would say, and it's like solid floor for you guys. Will you be able to guide sort of expected cash flow for Antamina? Kind of have clear visibility on the production, the capex, and thus being able to say, okay, we're going to get this check this quarter and this check or this amount this year. It's a bit opaque in that regard.
Yeah, I think if you guided specifically how much per quarter, you're going to fail, in my experience. And the reason you're going to fail is, as they expand the mine life, there's additional costs associated with, tailing storage facility, asset retirement obligations, traditional stuff you'd find. And so depending on which quarter they incur some of those costs or accrue them, that's going to reduce the check that you receive. And so we've tried to highlight that in our presentation of you're not going to necessarily know exactly what you're going to get on a quarterly basis, but on average during that annual year, based on spot prices, you're about 10 to 15 million US net of the stream and residual royalty that Sandstorm's retained in that Antamina asset. And so, 2021, I believe, was a stellar year where on a gross basis that cash flowed over 40 million US that 1 year alone. And so when you strip out the silver stream and the residual royalty that Sandstorm would have kept, our portion at Horizon would have been closer to 23 million US. And so you should just see Antamina as more of a stalwart, that you're getting steady cash flows with variability over the coming decades. That's how I would guide it, and what people should expect. So some quarters are going to be outsized, and some quarters are going to be a lot less than you expect, and it'll average out. That's just the nature of how that royalty that's existed for over 5+ years.
So people who are not familiar directly with the figures at Antamina, not tracking it like you guys are, would you say that there is potential, like clear potential for incremental improvement? And usually that would be higher grade being mined during a period, or throughput being expanded or something like that. Do you see that, or will it just be, should one just expect steady state things being maintained in the coming decades? What do you think is likely?
Yeah, we're excited about, when you look at that, that resource at Antamina, the reserve isn't necessarily that impressive, although it's large, but the resource is, massive. We're talking about billions, ton, like it's incredible. And so that's not in any mine life right now, because in order to be part of the mine life, you need the additional footprint associated with your EIA. And so when you look at kind of like what publicly Teck is saying, and CMA is saying, they're hoping to get that modified EIA over the next 6 months or so, hopefully be announced, where the mine life just gets extended to 2036. That's an additional 12 years, just like that. And it isn't a function of, are you going to find more resource necessarily. It's more related to tailing storage facility. So I think when people look at Antamina in the portfolio, they should look at it as you've got this kind of like anchor asset that is going to be cash flowing for many years to come. There's going to be improvements on the project, more drilling to kind of expand the pit, maybe underground, and that'll add many, many, many years to the mine life. And I think that's what you're going to find. But there's going to be, costs associated with tailing storage facility or not. And, that all information is all public, and we've included that into our projections with some additional overruns that we think naturally always happen. And so we've tried to be conservative in our projections and use 10 to 15 million US. While if you look at, what it had done over the last 5 years based on lower prices, you would have got, hey, shouldn't it be higher? And the reason is some years it'll be higher, some years it'll be less, just the nature of that asset itself. But the question isn't what is it going to be this year or that quarter, is what's it going to be over the next, many decades to come. That's how we look at it.
And the sensitivity to those cash flows, so $1 per pound in the copper price, what does that equate to in terms of using that calculation? If you just do a linear, what's the linear leverage to copper price?
Yeah, it'd be significant. Like when you saw copper go to close to averaging 420 in 2021, you saw, that payment go to $23 million US that year alone, attributable to Horizon, gross over 40 million, where the previous year, when it was, certainly not at those kind of high watermark copper prices, it was. But that royalty, the average on a gross basis, about $22 million, $21 million historically on a gross basis. But it's the calculation associated with the NPI royalty that takes, account of working capital changes. And so one quarter, if your working capital goes up or down, you get, massive increase or decrease. tends to balance itself out over time. But that 1 year, copper was at high, but there was some working capital changes that, straddled a year end. So some of the cash flows came in a little bit earlier as opposed to later. And so there's all those nuances associated with it.
Yeah, and I mean, essentially, you are exposed to, although this is a world-class asset, so the operating leverage is not huge, obviously, but there is still some operating leverage because there is a cost associated with the net that you're getting, of course.
Yeah. What's unique about the royalty, though, is if you finance, those capex costs with debt at the project level, it doesn't reduce any of your NPI payments. And so we've taken the conservative opinion that it won't be debt finance necessarily for future increases in capex. But if it is, it will exceed our projections. But again, the question isn't so much what it'll be this year or next year, is how long will this be cash flowing and the quality of the cash flows underlying it.
Yeah, it's a generational thing, obviously. So it's a nice anchor, as you say.
Yeah.
And so then let's move to Hod Maiden, and here we have more things to talk about here. So can you kind of outline the development timeline for the project in a bit more detail, as has been communicated recently?
Sure. SSR Mining will start publicly talking about this more, but right now they're working through detailed engineering. There is a tunnel that they're going to be working on, the Salakshir tunnel substation, in terms of electricity. They're working on an expropriation of the remaining amounts of land associated with going through the process. This is people who it's hard to find out historically who's owned some of these small parcels of land, and so they're going through that process right now, and they've made good progress. They are also focusing on the project financing of that project. And so, they're working with banks to move that forward. They took over from Lydia Mating-Chilik, who was moving that project financing previously, and we're excited to have their expertise, SSR Mining, bringing in a lot of their contacts to move that project financing. So if I look at, what are the things that are being announced over the next while, hopefully some more information on the integrated team that's moving that project forward. Some people, when they look at a mining project, they don't realize sometimes how does it actually get constructed, who's building it, etc. Sometimes there's, EPC, EPCM, all these different acronyms that are associated with it. And it's like, are you outsourcing the construction of this project to who knows what? But this is an integrated team where you're utilizing expertise of SSR Mining to actually build it. The people who have the reputations, their careers, their equity, et cetera, on the line to make sure that moves forward. Unlike some other mining companies where they're like, hey, we don't necessarily have the breadth and depth, and why don't we just outsource it to a company out there to move it forward? This is more of an integrated team, and you'll hear more about that. And so, construction decision and a feasibility study, technical report will probably be announced this year. Well, by probably I mean it will, based on what SSR is saying. The timing of that is at Q2, sometime around there, as hopefully when it happens. But that's the kind of high level of kind of steps moving forward at Hod Maden, and we've been working closely with their technical team in finding out the optimization strategies they're using. Because it's always one thing to have a feasibility study out there and say, this is how we do it. It's another thing to be like, okay, this is being built, and how do we make sure it makes sense? And so that's what they're going through right now, the optimization of those studies.
So Q2 would be optimization, and then at that point, I mean, these guys will be able to get the debt, I'm sure, super easily. So financing should be a quick thing post feasibility. So you expect your equity portion to materialize in H2 this year. Is that reasonable?
Yeah, they're working on they have been working on optimization for some time. They'll put out their technical report probably sometime this year, middle of the year, and I imagine the project financing will get probably announced alongside of FID, a final investment decision by SSR. And so project financing, I think, always just takes a long time. Candidly, in my experience, it isn't super quick, but it's something that's been going on for some time, and SSR has experience with that. And so I think you're going to see more expenditures, Horizon's equity check move forward probably in the second half of this year.
So what's your expectation on what the final capex might look like? Give people a sense. If people are completely unfamiliar with what the absolute figure might be, what would be your intuition? And obviously, you guys have a 30% on 30% on the equity.
Yeah. So the feasibility study that came out a couple of years ago was about $309 million capex on the project, so very tiny. But in my experience, cost overruns happen, inflation happens. And so if you look at projects between when, this was done to today, you've had generally, inflation increase. And so if you kind of do the math, an expectation would be closer to $400 million, let's say, based on that inflation over the last few years that have happened. And so, SSR Mining is working through that process right now to figure out what that is, and they'll put that in the technical report, whatever that number ends up being. But I think as a general investor, I've always found that you have to look at inflation, and if it was 300, 400 is probably closer to the right number based on inflation alone. So that's ballpark. Now, that isn't backed by a technical study, which hopefully people understand, and that's what you have to base it on. But just based on inflation alone, what you were seeing over the last number of years, that's what it would be. So if that gets, project finance $300 million, that leaves $100 million equity component. Our portion would be that 30% of that incremental amount. And again, we have access to, capacity, debt wise or other.
So yes, you have the cash on hand, $20 million. You will continue to accrue a little bit, but what kind of credit facility do you guys have access to draw? Because likely it will be more than 20 million, obviously, that will be required for your equity portion.
And so in the background, we've, had discussion with chartered banks, and I don't think it would be surprising for people to see have access to a revolving credit facility at low cost of capital to move our portion forward for the incremental amount. Even if you assume that doesn't materialize or doesn't go forward or it's not enough, we have a credit facility available with Sandstorm as well.
Of course.
So it was in a situation where someone's going to lose an asset as a result of losing everything. So the key determining factors are, is there project financing in Hod Maden? We believe that's a base case. SSR has publicly stated that it's everyone's incentive to make that happen. And we're excited for that moving forward.
And then, the other aspect here, do you see any potential for upscaling or revision of the last feasibility study? So if something like that would happen, maybe a higher throughput, you could see a bump up in capex even further. But obviously, more cash to you down the line. Do you see that playing a factor as well, or do you think it will be unlikely?
No, I think SSR is a great operator. I think they've shown that they can do incredible things, especially at Çöpler. But I think what's more valuable isn't so much, because when you look at it and you go, I think a nice rule is, how long does it take to pay back the capex associated with the project once it's running? Like, does it take 5 years? Does it take 8 years? Because the capex is so low, the payback is like less than 2 years. And so it's just this massive cash flowing machine. And I think what you'll see is, sure, there'll be optimization. There'll be higher returns associated with it. The study that we've used was at like $3 and maybe 20 copper, $1,600 gold. And so it'll be a lot higher, I think, in the long run. But what you have to look is, there hasn't been much exploration on that project. When you've got like this, what our geologists believe, this potential offset, I think people get really excited about what more can you find along this, alteration zone. And it hasn't been drilled extensively at all by any stretch of the imagination. But the little drilling that's starting now, the infill drilling, we've published some of those results. they're just incredible grades. They're just bonanza type grades. And I think as that gets expanded, people will probably get most value on their investment in terms of finding more resources.
So what was the mine life outlined in the last feasibility study? And what was the throughput being considered back then?
Yeah, so the mine life was about 13 years, the reserve case, and that doesn't take into account, any new drilling that is happening will happen. It's about 800,000 tons. So when you look at, what is the actual, pounds of copper, you're getting about 20 million pounds of copper on an annual basis and about 155,000 ounces of gold on an annual basis. So, over the course of the mine life, that's over 2 million pounds, 2 million ounces of gold. And you're looking at, 250,000 pounds of copper. So significant, but what's amazing about it is just the cost incredibly low, and it's just cash flow. It's a cash flow machine. That's the beauty of Hod Maden.
So, but it does sound like between that feasibility and now, there hasn't been like a shit ton of drilling, so to speak. So likely the throughput should remain the same. It should be built with that throughput, 800,000 tons per annum. That shouldn't be revised upward already. That's probably expansion in the future, like it sounds like.
Yeah, I'm hesitant to say it won't be because SSR, they're going through that process right now and they're working through the optimization. But we're excited for them to file their technical report and show what they've been able to do. But there's always, nuances associated with the project and how they get optimized, etc. But if I'm a shareholder, what I look at is what is the capex, what is the inflation, what is the number going to be? But it's not a project where, with most copper projects, it's like $1 billion to build. And so when you're looking at 30% over, you're like, oh my gosh, 300 million. You've got a 300 million capex that, based on inflation, what's happening in Turkey and the rest of the world, close to, let's say, 400. So it's not a massive capex build, which is comforting.
Yeah, no, honestly, I'm just asking because I would feel like if they revise upward, that would just be good for you guys. Because if they do so, I'm confident that they're able to execute that. So the kind of the increase in capex, it would be maybe like 10 million or I don't know, some 15 million for you, and maybe the production would increase by a significant amount as a trade-off. So I feel like that would be very good. But well, let's wait and see what they release them. So that's gonna be very interesting to hear.
Yeah. They've been known to be conservative in terms of, estimations, etc., and they tend to exceed those when they get into it. And I think that's a good way to do it. This is a project that, NPV was over $1 billion US, and and I'm talking about after tax, and that was based on $1,600 gold and 320 copper, and so just by the time this gets into commercial production, which is slated for 2027. I think copper prices are going to be higher and commodity prices will be higher. So you get that natural also increase as well in the value of that asset. So, excited for that.
And I take it you guys, I mean, the existing kind of projections that you guys are using now is based on the last feasibility study. So you will have some potentially interesting revisions coming up in your guide and what you're guiding in a couple of, when that's released. I take it as well.
Yeah, I think the key determinant factor is really, commodity prices at that time. But again, when your all-in sustaining cost for, your gold equivalent is like $550, costs don't really matter in that scenario because it's so cheap, as opposed to, mining companies out there are like at $1,500, $1,600, $1,700. It's not really all the costs, and they're just washing their face. This is one where it's just going to be cash flowing for some time. But excited to see SSR move it forward. I think construction happening this year will be a good re-rating event, and the financial investment decision and the project financing. Those are I think the key determinant factors.
So could you just clarify briefly, I mean, the actual mechanism, because some people might be wondering, the mechanism of funds making their way into Horizon's bank account once cash is starting being generated. How does that work? Is debt going to be prioritized on the company level first, repayment, or do you have some clause where you would get your thing? I mean, your portion of the cash flows right away. How does that? How is that structured?
It's a good question. Those nuances will be determined based on the negotiation of the project financing. So traditionally what happens is some of those cash flows are used to pay the project financing. They do the completion test. Then there's some portions of a cash sweep that get dividended up. So those are conversations that happen over the next 6 months and negotiations. And once that comes about, we're happy to let our investors know and the nuances associated with it. But the nice thing is these aren't, capex figures or debt that will take years and years to pay off. That just
good payback.
It's good, but yeah. So the way it works is you've got your project once it's built and the project financing. Let's assume it's done. That incremental cash flow that they're making on an annual basis, it gets dividend out any excess ones to the holders. So that's ourselves, SSR, and Lydia. And we're all incentivized to have cash come up. We're very much want dividends. It's not some unique, esoteric structure.
And I think we kind of touched upon this, but also to clarify, so the one kind of CapEx item before cash flow starts materializing is, I guess, if they decide to drill a bunch in parallel to building the project. Is that something? I mean, obviously, you guys have a say in that because you're a shareholder. But do you think that's likely? And what kind of budgeted have they been kind of talking about what figures they would allocate towards drilling in that manner? And
we haven't gone into detailed budgeting on exploration results. I think people have been focused more on the building of the project, but it won't take very much to do some drilling. Your component amount of our attributable pound. Let's say they do $5 million for drilling, portion would be, million something associated with it, which we would be excited to actually deploy because then you actually get drilling and then people can see, oh my gosh, what is the quality of this asset? So I don't think it'll take very much.
Yeah, so just to clarify, I mean, sometimes you can see $50 million infill drilling campaigns, and that's not what's being contemplated there.
No, good question. Yeah,
no,
that's not.
Yeah. Okay, so let's just speak briefly about your capital allocation going forward. So I mean, of course, you have these outstanding commitments to Hod Maiden, and that takes up a lot of your muscle mass in terms of the financials being deployed. But what kind of investment propositions could you see kind of materialize in parallel to Hod Maiden playing out, and how would they probably be structured financially? Could you give an example give people a sense of what could take place?
Yeah, so over the next 6 months, I don't see anything materializing because we're focused all our efforts on Hod Maden. But in the next couple of years, I mean, what you have is a portfolio that's matured so significantly. Okay, everyone sees Antamina, but Hod Maden's actually in the construction build. People see that cash flow coming in. That'll re-rate to your share price. And then Oyu Tolgoi, those cash flows associated with it, they're going into production on the ground in 2027. A couple of years, that's very close. And so you've got a portfolio that's going to be cash flowing tremendously, and those cash flows are a lot closer. And so the valuation proposition is a lot different than it would be today from an accretion perspective, what you buy or what you don't buy. But probably my best example is the $100 million one that I gave before of if we're finding an asset that makes sense and it's accretive, the equity check would be quite small compared to the actual capital outlay required. But over the next, 6 months, you're going to see us focus on the portfolio that's maturing, Hod Maden going into construction. That's what shareholders should expect, and great news coming out of Oyu Tolgoi and all that ground that it's being going to be drilled on and hopefully be part of a new study that gets done and increased because it's all open, in both directions on Lift 2, which is quite exciting.
Do you think, I mean, and this might be difficult to answer, but do you think there could be potential to, since Sandstorm has considerable, they can make moves now. Could for example, assets be parked in Sandstorm that later find their way into Horizon? so to speak, during a period where Horizon might not be able to execute the deals directly? Is that being contemplated?
No, I would say that the assets that were spun out of Sandstorm have already been spun out of Sandstorm. Sandstorm has this incredible growth profile already built in. If you look at kind of their projections, it's tremendous. It's got access to some of the best assets in the world, and they're starting to cash over the next couple of years. Hot Modern is probably its anchor asset in terms of streams that accounts for 12% of its NAV. But I think over the next while, if you see a transaction happen, it'll be a traditional kind of vanilla copper asset minority position, precious metal byproduct, as opposed to assets being transferred to Horizon. I don't see that happening right now.
Okay. And I mean, just generally speaking, it would be interesting to hear, what are you seeing out there now? I mean, do you see a bunch of potential to acquire a minority interest in copper projects? Obviously, unlikely to happen in the coming 6 months, but just give a sentiment on what's going on out there.
Yeah, I would say it is incredibly hard to find copper assets, period. But where everyone's looking at is buying copper assets that they get to operate and they're a majority holder of. That's where everyone's kind of competing in. No CEO out there goes, I want to buy a minority position in a copper asset. There just isn't any out there. For them, it doesn't make sense. For their technical team that they've built up, it just doesn't make sense from a leverage kind of utilization of resources perspective. And so, and giving up that to another competitor or peer. So the population size of transactions that might be available is significantly larger when you're looking at passive minority positions. And so that can be, people who have historically acquired a minority position for offtakes, and they're not looking for, holding on that, or they want to justify to their investment committees, and they were more interested in the offtakes. Or there are projects out there who say, I don't want to sell a stream or royalty. I'm going to sell 5% of the project to, meet my CapEx requirements or fix some budget deficit that's coming with respect to the balance sheet that they have, and they're willing to take on a partner that's well respected. So we're seeing that as well. The third thing we're seeing is a strategy of looking at projects where we're partnering with another mining company who would come in as the operator of that asset. They would hold the majority position, and we would come in for the minority position. The benefit they get is they've, our technical teams identified that asset, found a way to transact on it, and have the capital available to do that. And so those are the three kind of venues that I see in terms of, pipeline. There's some assets that have been through a pipeline, and we had willing partners and people who want to transact, but some of them fell by the wayside because they didn't meet our due diligence criteria. I think it's important to not only be associated with quality assets and good operators, but, social license becomes very important. You saw that in Panama with First Quantum. And so, our rigor of getting associated with assets that have that license has been really important. And so you'll see us continue.
And would you consider down the road, acquire sort of, exploration, greenfields, brownfields, stakes into projects to potentially generate an entree style down the road? Or is that something you're looking at?
We've looked at, I would say that you're not going to see us deploy a ton of capital to assets that, won't be cash flowing for, decade plus. I think it takes a long time to get an asset, put into construction through the permitting process, et cetera. I think the average is around 15 years or so, give or take, unless you find the right project to be associated with. And that's why there's this deficit coming in terms of copper. But you can certainly see us allocate a small amount of capital if there's a project that we think is tremendous, that we know a good operator is going to come into, and that we can find a space for it in our portfolio. So certainly we'll look at that, and building that optionality, especially if it's on the cheap, can be really valuable to a company. But you're not going to see us deploy, the vast amount of our capital to those things. You'll see us do more cash flow or near cash flowing assets.
Excellent. And then, I mean, and you kind of touched on this, I guess, but, Sandstorm has more kind of copper and base metals exposure within their portfolio right now. Do you see some of that making its way over to Horizon potentially in the future? And would you accept exposure to other base metals, or does it actually have to be exclusively copper? Would you accept lead, zinc, and stuff like this potentially?
Yeah, we're focused on copper. And the reason we're focused on copper is it can get really exciting in the investment community to be like, oh, the next kind of like metal when it comes to batteries. I'm not picking on any specific one, but just generally lithium, cobalt, whatever you want to say. And I have a tremendous optimism that humanity can innovate, and that when challenges come, they can innovate their way out of like productivity, nuances. You can see that with the catalytic converter when it comes to platinum, palladium, its evolution over time. And so those specific metals, while now they might be in vogue or popular, there's either a question of there's just too much supply out there or they may not be needed. But the only metal that I don't see us innovating our way out of is copper. Like there isn't. Science works like the way science works in terms of conductivity. The only other better, metals to conduct electricity are gold and silver, which are just so much insanely more expensive. And so when I see, I don't have to believe in all cars becoming EV to believe in copper, because, I look at the electrical grid. I look at, what is the electrification process going on? Copper is needed. So that's a longer answer to your question of, do we see ourselves moving into other kind of battery metals or any of that stuff? No, we're Horizon Copper. In terms of other assets that we'll acquire, I don't think you'll see assets being transferred or spun out of Sandstorm into Horizon. I think that's already happened. We've got at Horizon our quality key assets in terms of copper. What you'll see is us acquiring cost of copper interests going forward from independent parties.
Excellent. And then the final question, which we always like to ask: what is your 5-year vision for Horizon Copper? Where will you be in 5 years from now?
Yeah, we plan on becoming the premier mid-tier copper company in the next 5 years. And that's going to be done through acquiring a unique portfolio of these passive interests, building up on them. We've got the anchor assets in Antamina, Hotman, and Oyu Tolgoi. And so when people want to go, I want to put some money into copper because I believe copper, but there's just so much stuff out there and I don't know what I should allocate capital to. I think Horizon is going to be the premier choice. Going, I love the assets in the portfolio. It's great operators. I know that these guys know what they're doing. They understand capital markets. They're not going to dilute the heck out of us. And I think we'll be the premier mid-tier copper company in the 5 next plus years.